Hello, and welcome to the October market update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. We had a kind of a mixed month, but we really had a great quarter, especially here in the U.S. For the U.S., over the month of September, the S&P and the Dow both did very well, even as the Nasdaq pulled back a little bit on weakness in technology. But for the quarter as a whole, all three indices were up substantially. It was another good quarter. Around the world, it wasn't as good, although for developed markets, at least, it wasn't as bad. They were down for the month, but they were up for the quarter, so it wasn't great, but it wasn't terrible. Emerging markets, on the other hand, were both down for the month and down substantially for the quarter, and it's been a tough time for them for a variety of reasons. Most investors, though, and certainly most listeners here, are going to be focused on the U.S., and here the news has been terrific. We've actually seen economic news move from strength to strength. We've seen growth continue to be strong and even revised upward. We've seen hiring continue strong. We've seen wage growth pick up. And unsurprisingly, because of all of that, we've actually seen consumer confidence spike to an 18-year high. Again, consumer confidence is as high as it's been since the year 2000, at the peak of the dot-com boom. And that says people think things are pretty good. If you look at the business world, we also have a tremendous amount of confidence. Industry surveys have spiked recently. They remain at very high levels, and historically that's been a good sign for business investment, for continued hiring, and for continued economic growth. Even the government continues to help. Both the tax cuts and the additional spending are also getting behind the economy and pushing. So all of the pieces are in place, and even the Fed is on board. In his recent press conference, Chair Powell said the word strong several times to describe the economy, and at the same time, inflation is right in the sweet spot, very close to the Fed's target. We're in a good place, and that's actually being very good for the markets and is likely to continue. Not certain to continue, of course, because there are risks out there. We're starting to see signs that the end of the cycle may be approaching. Housing in particular is starting to weaken. It's not weak yet, but it's not as strong as it was, and you can see the trends starting to roll over. Political issues around the world continue to be an issue. Certainly, Italy is the most recent iteration of the problems in Europe, and Brexit is approaching. And of course, here in the U.S., we have the midterm elections and the ongoing confirmation hearings in Washington, D.C. This is obviously something people are concerned about, and they should be, but more as citizens than as economists. At the end of the day, the Supreme Court doesn't set interest rates, and when you look at the actual outcomes of the election, one of two things is going to happen. Either the Republicans are going to retain control, which has been constructive economically, or we're going to have divided government, which also has not been a bad thing historically. So from the big picture perspective, you can pay attention as a citizen, but economically, we're actually in a good place, and the political risks are not likely to be all that large. What will happen? We don't know, but at this point we do know that the fundamentals remain solid, and we know that things are very likely to continue to be positive. We'll see, and I'll talk to you next month. Thanks for watching.